Okay, welcome back to another video. Today I will be going through what happened last week from the 20th of November to the 24th of November. And as we can see right here on the 15-minute chart, I've basically marked out these boxes right here, and all these boxes are basically from London's open all the way until New York's close, because that's pretty much where I trade. I trade the London session as well as the New York AM session. So this is basically the moves that happened during the day, right? So on Monday we had a bullish session. On Tuesday we had a sort of consolidation. On Wednesday we had a huge displacement to the downside. On Thursday we also had another bearish day, and on Friday we had a bullish day. So it might seem kind of random, but at the same time we have to understand that this is just following the high time frame bias, right? So we see that on Wednesday the huge retracement or the huge displacement to the downside was actually a return to discount prices, right? So if I draw a Fibonacci region from this low to this high, right, we can see that price actually retraced back into the 618 to 782 region and then reversed and continued the high time frame bias. And as we know, on the 4-hour chart we are biased, we are bullish for the pretty much we have a bullish bias. Is because mainly we have seen consistent 4-hour breaks of structure to the upside, as well as a formation of this weak high. So this high over here is weak because it did not break any significant structure to the downside. So I expect this high to be taken out for price to continue and potentially mitigate this daily supply right here. Right, so if you look at the daily chart right here, alright, we can see that there's this kind of like imbalance daily supply right here, and I expect price to come into this region. So look at the 4-hour chart again, right? This is the week high. Price is currently at this area right here. I expect this high to be taken out and a mitigation of the daily supply before something else happens, right? So as of now, we are bullish. Looking at the 15-minute chart, right? So during this whole of last week, I didn't take a lot of trades. I only just took one shot during Monday. So if you look at if you go back to Monday, right? So I took a short position on Monday's London session. So if I just go back in time, right, we can see that, okay, the start of the London session was here, right? And if we look at this right here, we have this Asian high right here, right? And price actually swept this Asian high during the London session and then kind of like reversed. So that was when I took that short position. So if you look at a 5-minute chart, alright, one of the criteria that I have is that there is a huge I would like to see, after a sweep of liquidity right here, I would like to see a 5-minute bearish candle or 5-minute engulfing candle, which in this case was right here, right? This was a clear 5-minute bearish engulfing candle. I went to the 1-minute chart, alright, and I saw this huge displacement. I was looking for a market structure shift. You could call this a market structure shift as well, but the 5-minute candle kind of gave me enough confirmation. So in terms of my entry, I took an entry at the 0.618 region, right? Optimal trade entry with a 4-pip stop loss right here. And I wanted to target this, London low right here, right? But however, I saw that price kind of like reversed at this region right here. So that was when I closed my position for about 3 risk to reward, about 50 here, yeah, so about 3.2, but yeah, after commissions about 3 risk to reward. So this was the short trade that I took, although it was counter trend, right, to the high time frame bias. But I saw the huge sweep of liquidity of the Asian high. I saw the 5-minute bearish engulfing. I saw this 1-minute displacement. I saw an ideal entry to take, so I just took the short, and it was a 3 risk to reward trade. So it's pretty good, right? So that was pretty much the only trade that I took during the week, and mainly because there was a lot of, if you look at the week, right, it was just basically creating a high and creating a low and returning to the range, right, between here and here. So it was kind of like a ranging week per se. And Tuesday, it was horrible. Wednesday, I was looking for shorts, but there wasn't a clear opportunity. Thursday as well. On Friday, I was looking for longs. However, there wasn't a clear opportunity, because if you look at where the London session started right here, Alright, London session started at this here. I was waiting for the Asian low to get taken out before I would take longs, but you know, price kind of like just swept the nearby liquidity here and then reversed. There was possibly an entry here. I could have entered at the 5-minute fair value gap, but I didn't. Looking for 1-minute entry to be more precise, so I didn't take a long position here. During the New York session, right, New York started over here. I was kind of like waiting for this London low to be taken out as well, but price kind of like mitigated this 5-minute order block here and just reversed, right? And there wasn't really a entry on the 1-minute in this region as well, so it's okay. We'll have more opportunities this week. So looking at currently, we are in Monday's London session over here, and on the 50-minute chart, alright, I still see a break of structure to the upside on the 15-minute. I drew a premium discount level from the Asian low to the Asian high, and what I'm waiting for is basically for price to sweep all of this liquidity into this 15-minute demand zone that kind of like caused this 15-minute break of structure, right? And that's when I'll be looking to take longs for here, right? And ideally I would want to wait for the Asian low to be taken out as well to give me more confluence, but after seeing that this low, you know, kind of like swept liquidity here, I expect this to be a protected low and price to kind of like respect it and then just continue up, right? I don't think price will do this and then go up because of how it has already swept liquidity, right? I'm not saying it won't happen, but ideally I think the best case scenario is that, you know, we have some fair value gap here and price will come down to this fair value gap, mitigate the 15-minute demand in 15-minute discount levels. You know, probably if we draw a Fibonacci level from here to here, right, we can also see the, you know, the 618 and the 786 region right here. So that's where I'm looking to take longs. For shorts, I mean, the bias is still bullish, and I wouldn't want to take shorts unless price takes out this high right here, because there's still, you know, significant levels of liquidity here. There's significant imbalance here, which price is already filled, right, in this region, but there's still liquidity here. So ideally I would take shorts if price were to take out this high right here and then create a strong, you know, bearish confirmation. So that's the only scenario I'll be looking to take shorts. Otherwise I'll be looking to take longs after price has swept this liquidity as well as mitigated this you know, fair value gap or 15-minute demand zone right here. So yeah, that's pretty much it. And looking on, I mean, on the topic of like whether we should take pro trend or counter trend trades, I mean, of course the bias is bullish, right? And we could still take shorts because we are, you know, kind of like scalping on the 1-minute. So ideally if price were to take, you know, sweep the Asian high and sweep this high right here, you know, and price presents a very nice confirmation entry, then, you know, shorts are still possible, because after all we're just catching, you know, maybe 20-25 pips at most. So it's not impossible, but ideally, right, for pro trend trades we would want to look for the best criterias. For counter trend trades we want the best criterias, so significant sweeps of significant highs and then strong confirmations like a bearish engulfing candle, clear market structure shift, fair value gap for an entry and stuff like that. So yeah, that's pretty much what we're looking for, and I'll keep you guys updated throughout the week, right? We have, for this week, we have what? Consumer confidence, home sales. We do have a lot of EU news, a lot of yellow, medium to low impact news, pretty much throughout the week. But then again, we should still be aware of, we should still take note more of the higher impact news like the core PCE, unemployment claims, ISM, manufacturing throughout the week. So yeah, my bias is still bullish for the week until we reach the daily supply up here, and then we'll just see what price does. So yeah, thank you guys for watching. I'll keep you guys updated and I'll see you next time.